Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour With AI. Crypto markets are experiencing a violent divergence between sentiment and fundamental flows. Rick Edelman argues that institutional tokenization is accelerating off-chart, despite a staggering $41 trillion drop in market capitalization and massive ETF outflows. This narrative of long-term structural growth clashes sharply with the immediate liquidity crunch. Investors are fleeing digital assets, yet the underlying infrastructure for institutional adoption continues to expand. It is a tale of two realities, short-term panic versus long-term utility. Meanwhile, the electric vehicle supply chain faces acute fragility. A new study highlights the global Cobalt network's vulnerability. 94% of cobalt is produced as a byproduct, primarily in the Democratic Republic of Congo. Any disruption in this region could trigger severe supply chain shocks for EV makers. The lack of independent mining capacity means price volatility will remain extreme. Automakers are left exposed to geopolitical risks they cannot easily hedge. On the macro front, technical infrastructure is under stress. CloudFront generated a surge of 403 errors due to traffic spikes and configuration issues. This connectivity disruption contributed to a 0.4% fall in the S&P 500 as tech stocks wobbled. The incident underscores the fragility of centralized cloud providers. When the backbone of digital commerce stutters, equity markets react instantly. Trust in digital infrastructure is now a priced-in risk factor. In related news, traditional retail shows mixed signals. A Canadian convenience giant reported a Q4 profit rise, driven by strong fuel margins and same-store sales growth. This performance offset lower volumes in Europe and the US. It suggests that regional energy dynamics still drive profitability more than global consumption trends. Conversely, the housing sector is compressing. KB Home reports Q2 2026 results on June 23. Consensus EPS of 46 cents reflects a 69.3% year-over-year decline. This signals deep margin compression in the housing sector. Builders are struggling to maintain profitability as demand softens. Looking ahead to today's release, there are no major economic calendar events with high impact in the next 36 hours. The absence of data releases leaves markets to digest these corporate and structural narratives. Traders are waiting for clearer signals on inflation and interest rates. Without fresh data, volatility will be driven by earnings surprises and geopolitical headlines. The cobalt supply risk remains a wild card. A single political shift in the DRC could ripple through global manufacturing. Similarly, the crypto market's $41 trillion correction demands attention. Is it a buying opportunity or a liquidity crisis? The answer depends on your time horizon. Tech stocks remain sensitive to infrastructure reliability. The CloudFront outage serves as a reminder that digital resilience is a competitive advantage. Companies with redundant systems will outperform those reliant on single providers. In housing, KB Home's earnings will set the tone for the sector. A miss could accelerate the decline in homebuilder stocks. Watch for guidance on inventory levels and pricing power. That's your market briefing. Follow Rumour With AI for daily market intelligence.